Good morning, good evening, good night, wherever you're watching this transmission. Is I, Mike Martins. It looks like the UK property markets look like they are bouncing back in today's article. So what is going on? So let's read this and get down to this, because we've been covering the UK on trends in the housing market every Wednesday night. Whenever we get anything, everything we've been getting on trends in the housing market usually for the UK is blaming Brexit. And I mean, other countries blame Donald Trump. I mean, it's always something, right? So nobody ever blames affordability levels. Nobody ever blames better paying jobs. No one ever blames the right stuff, but they're always blaming the wrong things and never tackling the real issues. So what's happening right now in the United Kingdom? UK property asking prices rise in sign of housing market has bottomed out. 1.1% monthly rise in asking prices at the start of the spring season is a bigger than usual increase. London landlords fed up with capital's high taxes and property prices are increasingly investing in other parts of the United Kingdom. So a lot of people left London and other parts to move to, obviously, Belfast and Dublin and Edinburgh and Middle London, Middle England. People moved to Middle England. Homes for sale in Birmingham, about 60% from London-based landlords bought properties elsewhere in Britain in the last year, up from 25% in 2010. And this is a nice little photo here that depicts the situation. Lots of for sale signs everywhere. Asking prices for British homes rose by the most in over a year in 4 weeks of April 6th. A survey showed that adding to other tentative signs of the housing market may have passed the worst of its slowdown ahead of Brexit. Again, Brexit in the mix. The 1.1% monthly rise in asking prices was a bigger increase than usual at the start of the spring season and reduced the fall in prices in annual terms, 0.1%, property website Rightmove said. Britain's housing market has stumbled since 2016. Guys, we've been following this. It's been a, 24-month decline? So, I mean, a little uptick in increase in prices. Does that mean everything, all the wealth that was erased since 2014 or 2012 has been erased? Because if it stumbled since 2016, you got to backtrack a few years to create that aggregation of loss of any equity that was made. Brexit referendum with the most measures of prices showing only minimum growth in recent months, but the data has suggested that the slowdown stabilized in early 2019. Rightmove director Mike said that last week's delay on Britain's exit from Europe Union could spur hesitant move homeowners in the action. It's like the UK has been part of the European Union for the last million years. They're so heavily entrenched that it's impossible to get out. Come on, guys, seriously? We are not anticipating an activity surge, but maybe a wave of relief that releases some pent-up demand and take advantage of static property prices and cheap fixed-rate mortgages, he said. Noting visits to Rightmove's website recorded a high in March. So, guys, let's take a look at this, okay? All Brexit aside, okay? Let's get frank here. They are offering a lot of interest-only mortgages, right? And a lot of shady banking systems in the UK right now are offering 0% down, and some are offering 103% loan to finance. So you don't even put money down; they'll give you some extra money to pay down some other debt. I've been seeing that happen in some really sketchy areas, sketchy banking system or regulations. You got to watch out for that crap, because all they want to do is unload the property, and you are left with the headache. Rightmove's data is based on property advertisements in websites, which says it accounts for 90% of residential property on sale in the United Kingdom. Separately, London landlords are fed up with the capital's high taxes. So why are you going to buy into a property ladder housing market when the high taxes are burdening the owners? So it's almost like, okay, if property prices look like they're going to recoup and you're going to see some sort of an uptrend, why would you want to pay high taxes for anyways? Property prices are increasingly investing money in other parts of the UK. About 60% of London-based landlords bought properties elsewhere in Britain in the last year, up from 25% in 2010, according to broker Hamptons International. The trends has sent money rushing into north of England and in the Midlands, and the region includes such a major cities as Birmingham. The shift has been driven by in part by tax paid by buyers of residential properties that averaged £24,000, about 32,000 US, in London in the same year, compared with the £5,330 outside the capital, according to Hamptons. That bill has increased since change were made in 2016 to the so-called stamp duty land tax, adding a surcharge for buyers of second homes that affected individuals and corporate investors. So the UK was on the binge of bringing wealthy investors and wealthy speculators into the country from China, and that caused a huge upswing in prices in 2012, 13, and 14. Following the tax hike, landlords have been adding their strategies to find new ways to make their returns. Head of Research Hampton said on Monday, lower entry costs to higher yields outside the capital are enticing to investors to look further afield than they have previously. So watch out getting into that stuff, eh? Higher yields, lower entry costs, get now, pay later. It's not buy now because you don't own it, so you're leveraging it, right? The cost of renting a home in London rose by 3.7% in March to a record £1,737 per month, according to Hamptons. That's at 2.3% higher than the outside the capital, broker said. So renting a home in London is almost £2,000. Okay, £1,800. You need to make at least, with food and gas and everything, you need to make at least £3,900, £4,000 a month to keep your head above water. So is this just a little bit of a strategy they're doing with getting fresh blood in the market by, and it said it right here at the end, if you paid close attention, right here. Higher yields and less down. Yeah, it was in here somewhere. I read it. I read it. Let me know in the comments below. Thanks for watching. Let me know what you guys think.